Welcome back to ET Now, and on the Kolkata edition of ET Now on the Go, we caught up, like Winnie and Anisha actually caught up with Sanjay Banka, who is the CFO of Senco Gold, about the demand trends for gold, the key growth levers for the company and their plans for expansion. Are new consumers befriending the lab-grown diamonds instead of their real counterparts? Let's listen into a slice of this conversation for the answer.
Well, ET Now Go has reached Kolkata, the city of joy, and it's glittering everything around me. And that's because of the love of Bengalis for gold jewelry and other forms of jewelry as well.
Me, but fine, it is the jewelry that's shining.
In front of this, I don't think we have a stand. Given the fact that the kind of variety that we have seen in the Bengali jewelry style, right?
Absolutely, and the names is something I just learned. Shaka, Pola, Noah.
A whole host of variety that they have, but we need to understand the business of it, whether people are buying it given the gold prices have soared, and what is selling the maximum.
Must understand that, and to understand all of that, Anisha, I think we should go across and understand from the man himself who's joining in with us at the store. We do have
Mr. Sanjay Banka.
Yeah, the CFO of the company. We already saw some jewelry that we really loved. It was glittering. Sanka, Pola, Noah. We learned the names today. Now we know what
and
they
Gola
are.
Bala, that bangle with the rose.
Golab Bala, that is rose one, yeah.
Absolutely. So, when we talk about it, but me and Anisha are worried that, will we be able to afford those given that gold prices are gone up?
Right.
How are you seeing that trend, gold prices?
In terms of demand, are people still buying because gold prices have increased?
So what we have disclosed that in quarter 4, we have grown by 38%. So continuously the demand is increasing.
How have we seen the mix change, How is studded mix? How is the gold pricing?
Right.
Is the studded mix also something that's interesting customers more? The diamond jewelry sales, are they also glittering or still gold is the favorite here?
No, most important for us as a corporate is that we are focusing on the stud ratio, so which we call stud ratio.
Because it has higher margin.
Higher margin, almost 35% plus, and still our prices are among the best, if I don't say lowest in India. So the price, when diamond price, one should say as to which the price sustainable. Will you get a 100% exchange? So that is the facility we want, we provide to you. We also provide you the lifetime maintenance services, right? Not even diamond, even on Polki we provide exchange services. Even on the gemstone, so we have got one gemstone section called Ratna Yog. Most of the times we see that once you buy a gemstone, there is no resale value.
Yeah.
We provide even resale exchange value of the gemstone. So that is a trust, and that's why we have become second most trusted jewelry brand. This is the 4th year in a row in India. We are second most trusted, second most desired jewelry brand. And recently in January, Jan and Feb, Deloitte included us in a top global 100 jewelry brands in the world. Luxury
Top
brand.
100 globally in luxury
Global luxury brand. So
wow. Are you looking at perhaps expanding more products?
one more, we have been thinking of launching a perfume brand as well. So we've been working on the perfume brand for last 1.5 years. Very soon we'll launch the perfume brand as well.
Okay.
The whole
So we should
object
expect it in FY25?
by in the FY25 we'll be able to launch.
Okay,
But Mr. Bala, can this become, let's say, a large part of your revenue? Because this is just starting out,
It
right?
will not be more than 2% next year.
But over a period of time, you expect it to scale up?
No, that working we have not done. Let's say, but in 25 it will around maximum 2% for the next year. So we have launched 2 more exclusive Sennes stores. So while this is Insignia store, we have launched one in Manish Square, which is on the way to the airport, one in Forum Mall, and one in City Center. So we've got 3 exclusive Sennes store. We have launched one House of Senco in Delhi in the Lajpat Nagar.
Okay.
So the plan is to reach to the customer with a wide range, because once the Sennes customer comes, they can come to this lifestyle product. So if you look at this gossip range which we have, a gossip range is basically costume jewelry. Now these are all zircon made products. So while the similar product in a Swarovski you will find it at 10,000 rupees, here the prices are extremely attractive. So this is your section on gossip. or our diamonds, most of our diamonds are certified by SGL. We also get it certified by GIA to the customer. Our diamond prices, as we said, are amongst the best in the industry. And most of our diamonds are locally sourced. We do Kimberley certification, that is the mandatory requirement. So our focus clearly is on the compliance.
Absolutely, but you said a bit about expansion. You said House of Senco as well. Right now, focus has been most in this eastern side that you have, and you have expanded a lot more there. Do we expect that expansion much faster in the other regions, or do you want to focus in the area that you have been right now? And then what is the growth?
So we are market leader in East, and we'll continue to maintain our market leadership. Obviously, capital is a constraint. So we have said earlier in the earning calls that we will be having around 10 to 15 own store and around 10 to 12 franchise store, around 25 to 30. The focus will clearly be in the East and North, while we will have a good presence in South and West. So currently we have around 10 stores in South and West. The ratio, even in the next near future, it will be East and North will continue to be 80% and South and West will be 20%. So we are looking at around 300 stores, total 300 stores in next 4 to 5 years.
Okay, but Anisha, if you remember, when the update came in this time, we saw stock zoomed, but Senco has actually managed to outperform the players that have been there. And that's something I'm finding very, very interesting. That outperformance in growth that you all have given as an update. Do you think that's something that is expected to continue the growth rate that you have seen this time around?
See, it is God's blessing. All our
so
team
it was
really
more than 35% around,
38%. It was incidentally 38%, but overall for the year we have grown around 28%. Part of it was also due to the gold price rise. But we are very confident that we will achieve at least 18 to 20% growth. Above that, we will always keep a higher target because there is hunger for growth. But 18 to 20%, we are very confident that we will achieve that.
But Mr. Banka, tell me, the big disruption which is happening in the jewelry industry right now is artificial diamonds.
Right.
And people are wondering, why should I buy an original diamond when nobody can tell me the difference between artificial and the original diamonds? How are you seeing this trend? Are people going for artificial, diamonds? Is that a trend you expect to pick up?
So that is where we say Hireka Parki. We are Hireka Parki. So while the regular people will not understand the value difference, but as a jeweler we know the difference. Definitely it is very not easy to differentiate. So as far as the lab-grown diamond is concerned, the price of lab-grown diamond at a wholesale level had crashed to almost 2 to 3% of the original diamond price. So we don't know how much price will crash. It may not have a resale value. Not every player will be able to commit a resale value. Many players may not exist while they are committing. In that backdrop, and the real diamond is precious. So we have not seen any reduction in the demand. We've reported already 19% growth in the diamond value. So we'll continue to have a growth on the diamond. And across India also, we are not seeing any reduction. So particularly there has been a slow growth in a solitaire, but not in the small. So we sell, if you look at our diamond, they are in the range of less than 20 cents. So there is no demand degrowth in the lesser diamond range.
But just to complete that point, you have something in terms of your gossip collection already, which is, the semi-precious and the not real diamond. Would you be getting into artificial diamonds as well?
So this Senes,
is similar to that.
It will not be co-located. So when you go to Forum Mall and the Money Square Mall, we have got the lab-grown diamond as well.
Okay.
So we don't want to sell lab-grown diamond from the same store.
You want to keep it a different brand.
So it's an exclusive store. There you will find the lab-grown diamond as well.
But welcome back. You're watching Market Fatafat on ET now. But yes, we do have the latest update that is coming in, and this is in the Delhi excise policy case where the Supreme Court says that it is passing an order on a grant of an interim bail to the Delhi CM Arvind Kejriwal. This will be till the 1st of June. So that's a very big update that is coming in on that. From an interim bail is what Arvind Kejriwal, the CM of Delhi, has gotten so far. We'll connect with Sumit Chaturvedi in a short while from now. But that's the latest update that we have gotten. And obviously, this is from the Supreme Court that they have been passing this order. So we'll be keeping an eye out on that, and we'll keep you all more updated to that. Okay, yes, we have Sumit with us. Sumit, the latest update that is coming in here, could you throw some more light on that, where Arvind Kejriwal has gotten some interim bail?
Yes, absolutely. So this has happened just 2 minutes ago. Delhi CM Arvind Kejriwal has got bail from Supreme Court. The last time the arguments were closed and the judgment was reserved. And today Supreme Court, since in the morning, it's also sat, but the case was put after 2 p.m. And just now, it has been announced that Delhi CM Kejriwal announced that Delhi CM Kejriwal is getting interim bail till June 1st. Well, Supreme Court earlier also in the hearing day before yesterday said that this is particularly being given so that Mr. Kejriwal can participate in the election process, can do canvassing, can take part in the election process, but he cannot file, the files cannot be signed by him. No official work can be undertaken by him. So arguments were there day before yesterday where both sides argued in and against it. ED Special Enforcement Directorate, it said that it shouldn't be given bail. Kejriwal shouldn't be given bail, otherwise it will set a bad precedent for others who are languishing in jails, other politicians who are in jail, and they would also want to come out and take part in the election process. But now today, Supreme Court, day before yesterday, also showed leniency towards Kejriwal, and finally the Supreme Court has pronounced that Arvind Kejriwal will get bail till June 1st in the Delhi excise scam.
Sumit, thank you so much for that latest update. Till the 1st of June, that's an interim bail that Arvind Kejriwal has gotten. So that's the latest update that we have on the political front as well. We'll be keeping an eye out on that, and going forward, we'll keep you all more updated with that. But let's move on from there and keep it going with all the stocks that have been buzzing in trade. And let's bring on board the technical analyst from now. We do have Arpit Beriwal joining in with us this afternoon. Arpit, very good afternoon. Thank you so much for joining in with us on ET Now. And let's start with your first stock. You're going to talk to us about Hindustan Unilever. What is it that one should expect from HUL in terms of an up move? It's been quite stagnant for some time.
Yeah, very good afternoon, everyone. So talking about HUL, if we see this week, we have seen a good momentum across FMCG stocks, especially this week, whether it's Marico, Dabur, HUL. So technically, HUL, if you've seen, it's form a strong base near 2250, 2300 zones. On weekly scale, it gave a range breakout almost after 9 weeks. And from past 3 sessions, it is consolidated in a higher band between 2280 to 2380 zones. On daily scale, it's managed to surpass 50 DEMA. So looking at the overall chart setup, the risk reward is quite favorable because HUL moves in a broader range between 2200 to 2600. So technically wise, from here on, we can expect slow and gradual move towards 2450, 2500 plus levels. So HUL will be a preferred bet at current levels or minor dip towards 2330, 2320 zones with keeping stop loss of 2250 for an upside move towards 2450, then 2500 levels.
All right, that's about HUL. All these FMCG counters are trying to find some ground there. But moving on, and Gaurav, take us through SBI numbers then, company that you track very closely. How are the numbers and how are the brokerages looking at the numbers?
While talking about SBI, if you look at the numbers, those were quite strong. Those were actually over what the street was expecting. Even if you look at the commentary coming up from the management, that was quite strong. So on RBI circular, they have said that they all have almost 32,000 crores worth of non-NPA provisions. And just to quote Mr. Khara, he said that whatever is in the wildest dream, wildest of the thoughts can be absorbed in no time in terms of the RBI circular. Apart from that, he also has said that loan book can grow at 15%, and they are also quite mindful on cost of capital. And on back of this, if you look at brokerages also now, they have increased the target price for SBI. So for example, Nomura has increased the target price to 1000 rupees per share. If you look at Kotak Securities, they have increased the target price to 950 rupees. Investec increased the target price to 850, and we also have JP Morgan who has increased the target price again to 1000 rupees per share. So brokerages are being bullish on SBI. If you look at the stock performance, it was up 1% in the morning, but now it has given up the gains. But all in all, definitely keeping a track on SBI because we may see some momentum coming up in this stock.
Keeping an eye out on SBI over there. But let's move on, talk about defense sector stock that you have picked out, Arpit, and that is Bharat Dynamics. What is the chart that you are seeing now? Because in the last 6 months, we have seen strong gains of around 75%. Still expecting an up move?
Yeah, so talking about defense as a space, we have been quite bullish on all the defense counters, whether it's HAL, BDL or BL. So talking about Bharat Dynamics, technically the stock gave a breakout above 1800 levels after 4 months on monthly scale, and you've seen a good rally in April series from 1800 levels to 2100 levels. So in last couple of sessions, we have seen a decent correction, decent pull up from higher levels, mainly because of broader market correction. So it has retested its previous breakout zone near 1820, 1830 levels, and risk reward is quite favorable because from where the up move started, it has come back to its original level, and on daily scale also, it is near its 50 DEMA. So that is acting a crucial support from past almost 6 months. So one can go long at current levels or at minor dips in the range of 1840 to 1860 zone. That would be a good buying zone, with keeping stop loss of 1770 for an upside move towards 1950, then 2000 levels.
1950, 2000 levels is what one could see coming in for Bharat Dynamics at one point of time. That's the word from Arpit. But let's move on, talk about VST tillers. And Ankita, VST tillers reported their numbers, I believe. What were they looking like?
Well, yes, VST tillers reported its number. In fact, the stock slipped more than 4.5% after the company's consolidated net profit declined 13.5% to 34 crores in quarter 4 of FY24 as compared to 40 crores reported in the previous year. Now, the profit after tax for quarter 4 was at 42 crores, down 18%. The EBITDA also stood at 50 crores in the March quarter, registering a decline of 16% from 59 crores reported on a year-on-year basis. EBITDA margin also reduced to 17.5% in quarter 4 as compared to 18% on a year-on-year basis. So declines coming in there, and yes, we can see the move on the stock as well. Meanwhile, the board has also recommended a final dividend of 20 rupees per equity share. That's the word coming in on VST tillers, and that's the reason why we are seeing this stock down in our trade right now, trading with cuts of 3%.
Right, that's about VST tillers. But Arpit, coming to you to have your take on Bharti Airtel. This stock is once again showing good rebound, and in the past 6 months, we have already seen what a run up in Bharti Airtel. Tell us how are the charts looking like as of now.
Yeah, so within telecom space, if we see Bharti Airtel has been one of our preferred pick, and overall, if we see the technical structure, so on monthly scale, the structure of higher highs, higher lows is completely intact. On weekly scale also, slowly, steadily, the base of the stocks move higher and then it consolidates. So from it moved from 900 to 1000, from 1000 it moved to 1200, from 1200 it moved to 1300. So now on daily scale, if we see, in last couple of sessions, we have seen almost 3.5% correction in indices, but it has held its strongness in spite of market correction. So on daily scale, it has formed a strong base near 1250, 1260 zone. That is a previous resistance zone. So from here on also, we can expect slow and steadily move towards 1350, 1380 levels. So risk reward at current juncture is quite good. One can go long at current levels with keeping a small stop loss of 1260 for an upside move towards 1350 and 1400 zones.
Okay, keep an eye on those levels over there for Bharti Airtel. Surely I want to watch out for. Let's move on to the next one, stock number 15. I believe, Gaurav, you picked up Shyam Metallics for us. What's the update here?
Yes, let's just divert from the quarterly results, and if you look at Shyam Metallics now they have come up with the monthly updates, and if you look at the numbers, those are quite mixed set of numbers. So stainless steel, if you look at it, the volumes have increased almost by 17% on a month-on-month basis in the month of April. If we talk about aluminium foil, now that has gone down almost by 33%, but on a YY basis, if you look at the growth, that is up almost 22%. Coming to specialty alloys now, that has also gone down almost by 7% on a month-on-month basis, and again on a YY basis. Look at the pellets volume. If you look at the volume, now they're down almost by 12% on a month-on-month basis, and if you look at the YY figure, that is down 62%. And lastly, if you look at carbon steel, now that has gone up almost by 14% on a YY basis and 12% on a month-on-month basis, it's down. So all in all, on the back of these numbers, if you look at it, the monthly update seems to be mixed numbers, but if you look at the stock price, it has gone up almost by 2.5%. So definitely watching out on what happens in Shyam Metallics from here on.
All right, that's about Shyam Metallics. But Arpit, talk to us about Dixon-Tech. How is this placed on the technicals?
Yeah, if we talk about overall Dixon, so Dixon has been continuously uptrend from past almost 8 to 9 months. So we have seen significant gains in last 3 to 4 months also, but the uptrend is likely to continue. So talking about technically also, so the nature of the stock on monthly scale, it is forming higher highs, higher lows. On weekly scale, slowly steadily moves the base higher from 7,000 to 7,500, then towards 8,000. In spite of broader market sell-off in last couple of sessions also, it is strongly holding at higher levels. On daily scale, it is consolidating from last 9 sessions between 8,100 to 8,350. But the good part is that it is holding at higher levels and respecting to its 20 EMA. So slowly, steadily, we can expect another 5 to 7% upside move in coming sessions. So one can go long at Dixon at current levels with keeping stop loss of 8050 for an upside move towards 8888 and then 9000 zones.
Okay, that's a view on Dixon, but let's move on to the next stock. And Ankita, Relaxo Footwear, what were the numbers looking like for this one?
Yes, when you can see a sharp spike coming in the stock, was up 2% early in the morning, but has given up those gains. But let's look at the numbers then. The company has reported a consolidated net profit of 61 crores for the March quarter, registering a decline of 3% from 63 crores on a year-on-year basis. The total revenue for the company came in at 747 crores, a fall of 2.5% on a year-on-year basis, and the EBITDA for the quarter was at 120 crores, growing by 117%. Now, EBITDA margin stood at 16%, and the company has also proposed a final dividend of 3 rupees per share. All in all, a decent set of numbers coming in for Relaxo, and we can see an uptick of 0.8% on the stock right now.
All right, that's about Relaxo Footwears. But with this, viewers, it's time to wrap this edition of Market Fatafat. Thank you so much, Ankita, Gaurav, as well as Arpit and Aditya earlier as well for joining us today and highlighting all the buzzing counters in trade as of now. But with this, it's time's up in this edition. It's a goodbye from me and Winnie and the entire team who put the show together. Viewers, thank you so much for watching, but don't go anywhere. Closing trades will take the action ahead.
If you like this video, then like, share and subscribe to ET Now.